6:16 a.m. Pacific Standard Time, 6:22, 2000 calendar 12. Yeah, it is. What's more important is the Dow futures are up 65 handles. Nasdaq futures up 7.8 handles within the bull and bear. Headline news, volatility on a Friday, weekly options expiration. A ring a ding. That's right. That means that cash register is ringing. And that means one thing. We're making markets. And we're live right now at 6:17 a.m. On that, I've already given that 570 put. I've given a mark to market. Alarms fall at 280 and lower. Okay. We would like to mark to market within the volatility depending on the directional movement, that how many deltas. Now, we sold down big, and these puts that were manipulated all week, that put side finally got marked up, and then the calls were short, like I said, early in the week. And they had those high frequency or low frequency models, it doesn't matter, had to cross the bids, and they did. And then they marked this down, like I said. And the upside volatility is still going to be in the market because they downgraded 15 banks. ECB takes additional measures to increase collateral use. And that's exactly the kind of headline news that is pegged electronically to the buy and sell scripts in the cash equities market and the cash futures market and various different markets that are pegged to the headline news. We're going to set prices here where this thing hit 1010. We're going to start marking our entries here based on this going up above the 570 area now. It has to go up on that opening bell, above that 570 area, and we're going to mark to market. We're going to mark to market 4.7 right now. That would be the lower entry order. However, what are we going to do? We're going to set alarms, falls to, let's say, 750 and lower. You want to be notified at that point. And we mark to market down that 565 call with that $3 gap. Do they take that premium down to $1.80 where our limit bid is? And on that 570 call that got marked down from $10 on the high down to 75 pennies. And we had some people buying those yesterday. That's that 570 call. And I'm going to tell my MMTs right now to go ahead and load the bid between 15 cents and 25 pennies. So start your bids at 25 pennies on that 570 call. Here and now, before that opening bell. Because it's going to be time to do what? Steal and catch that wholesale bid. And pre-market's over. You have 11 minutes to the opening bell. The price volatility and reversals both within the weekly price action are in the name Google. We know that. We know that Google went up and hit the 100-week moving average at 573 and some change. They got it up above it. But then, because of the longer-term downtrend, once they hit that upper end of that resistance of 584 again, hey, it dropped $20 almost. But the tape, the bull tape worked out way up there with the high frequency machines, and then the bear tape finally crossed the market. So one of the things about it is you only have 1,300 shares. And Google is not the same name as it's always been. However, we got bids here on that 570 call. I'm going to conclude it. We'll be doing this Apple trade. And one thing about this Apple trade now is that I'm going to show you how that Google chart came down through that 20-day and that 10-day moving average. And 560 is right down here. This is where he started his little daily rally. And we had calls up to here. And then the puts, well, now the puts are working because of that daily reversal. But let me tell you, you're going to be looking at where that 3-day movement was relative. One thing, MMTs, look at the amount of selling versus the last green up bars. You got, this is what you want when there's reversals. That means that when you go up and hit that resistance level, you're going to roll over. And that's the daily Google chart. Now, on this Apple AAPL, we'll just conclude this one. But you want to be mindful of one thing, is that its pullbacks will remain strong, but there's a lot of headwinds. And the headwinds that Apple's going to be faced with and what the general public will look at will be that 10-day simple movement average in 20. And if Apple starts to sell through the 10-day, how many stop market orders would be taken all the way out? And put that, there's the bottom right there, 570. However, you still have these tops right there. That's 578, and you still have some prices in here at 574, 75, down in this lower area, and right above that 20-day simple moving average. With a, see, they all have something in common. When we went long on these little 3-day rallies up here to the highs, you can see the 3 days, they all have that reversal bar. And that this reversal daily is much greater than this last diminishing top. It did not take out this bar yet. So, in order to say that this trend gets weaker down at support, is you have to have the same amount of reversal as you did to the upside bar. Yeah, the reversal bar has to be the same way. And these are going to be the support levels. And that's going to make, oh my goodness, I'm going to Apple, AAPL. Oh my goodness, 7 minutes to the opening bell. Look at these calls, these 585 calls that we bought down at the lows. Look at, they were 520 on the high. They got to 37 pennies. I'm going to focus with you on your 575 call because they were marked down 6.78 here. The range was $9.33, $13.53 on that high. Ding. That's the 575 for the weekly Friday options expiration pair. Oh yeah, it's Friday. It's payday. Here's that 570 call that got marked down 7.6. 2,700 traded 18.30 on the high, low 8.25. And we had purchases in these as well. So, based on that 577, this is a gap open. And this is a gap open. However, they're going to go up, and what you're going to look for is that sell bar right next to that green bar. It would be red. It would go below that previous half up bar, and your ratios would be changing in a direction that would support a sell gap short at resistance levels.